up, YouTube? How are you doing? Okay. What's up? Welcome. Another live stream. It's the second one today, but this one we have a bit more time now. So previously, earlier today, I had to go. I had a meeting with my business coach, and got home, had dinner, set up a new secondary screen, and now we are live. YouTube tells me, by the way, that YouTube is not receiving enough video to maintain a smooth streaming. If you have any problems watching the live stream, make sure to let me know, and I'll see what I can do. But all the cables should be connected. It's just a new screen that I have now. Used to be my wife's, but with her new MacBook, she can't connect the new screen, so I can use it, which is very nice. So I'm very happy actually with this screen now, and let's see how it works. But internet and everything should work, so I don't really expect too many problems. Everything working? Cool. Okay. Sounds good. So earlier today, short live stream, about 15 minutes, just covering price action shortly. And when I was in the train to my appointment with my business coach, I also wrote something in silver. The silvers will have seen it. And something we've been talking about in the video is also the probabilities, of course, of the morning. Just in a nutshell, this structure down, right? Either a 5-wave structure or an unfinished 3-wave structure, right? So therefore, on the 4-hour time frame, it makes sense to look for the lows. So the probabilities this morning on the 4-hour were bearish or continuation of the range, right? Now we got the move to the downside. We took the lows, and I wrote here in silver. I was in the train, so don't expect high quality pictures, but I circled that same structure where I said it's either a 5-wave structure or an unfinished 3-wave structure, because the second leg didn't hit the 618. I'll show it on stream in a second. Most bullish scenario is that this is a wave C in a flat, but wave B did hit the 1.618. I'll show it in a second. So increases probabilities for a 1 or an unfinished corrective structure, increases probabilities for continuation of the range / a bearish scenario. And and then we have the news, of course, taking 70k X in the bullish basket. So I'll explain what I mean, so that hopefully you understand a bit better why the probabilities on the 4-hour were a bit higher to move to the downside and take the low. So that's why I had continuation range / bearish, because I gotta say, it is not easy to communicate bearish. Of course, when many around are bullish. Now Stuba, luckily, is someone that loves the bearish side of things, so that's good to see. And of course, tested that, or I joined his direction as well when analyzing this piece. So it's nice that we got the move to the downside. So those probabilities played out, took the low, and now the question is what's next, no? So that's what we're going to do in this live stream. And what I just read for you in silver, I'll make sure to put it on the chart and explain it again, but then with all the graphics and the fibs and stuff on the chart. So Karim Adel, welcome. Stego, good evening. Good to have you here. Mirovsky, Valerio, Malon Bakker, goedenavond. Veronica, good evening. Trading Queen, how you doing, Trading Queen? Is your husband watching as well? If so, how you doing? Ahmed, yes, Ilya, what's up? Shushan, when are you planning to fix this stretched screen? Well, pretty much never. Because the thing is, I cut away the top of the screen and the bottom of my screen, so that you don't see all the tabs I have. You don't see the the bar that I have with all the maps, right? And you don't see the apps and stuff I have open in my Windows bar at the bottom, because it doesn't add value to the stream. So that's why I only focus the screen on TradingView, but that means it's a little bit stretched. Then just share one tab screen. No, because I like to have more than one tab. And I also still have my folders above, the look, it's very simple. If you don't like it, you leave. It's, you know, it's 1, 2, 3 out. So either you like the analysis or you don't. And if you're annoyed by the screen, then you can go to someone else. I don't even have to explain myself. This is the way I do things. You don't like it, then it's fine. So very simple. Of course, I like feedback, but this for me is this is not relevant feedback. Yeah. So I still have my folders that I have up here as well, with all sorts of stuff, like you know, the tabs in the browser. I have multiple like tabs as well above, but then below the link you have the folders, right? I don't see a reason to go full screen. So there you go. Gustav is watching as well. What's up, Gustav? Since back, I've been watching all your streams. What's up? Yes, cheers. Yeah, you're always welcome. Always welcome. Happy to have you, but good to have you here. Attila, howdy from Texas. NG or Faltugiri, welcome. What's up, Austin Davis? Yeah, live stream for the Americans, right? It's a little bit better. It's always good to give suggestions, but you know, this is when are you planning to fix this stretch screen? I mean, well, you know, and then just share one tab screen. No, I do not. So politely, I do not have interest in doing that. You are not using the TradingView app? No, I use the browser. So yeah. So yeah, I do the way I like to do my stuff. What do you think about ADA? That's something for the altcoin streams on Sunday. So let's start. So in this live stream, right, what we're going to do is cover Elliott waves, and in particular this range as well, which is quite interesting. But I will do a top-down analysis. So what we're going to do is go to the weekly and then go to the daily and da-da-da, right? So that is, yeah, maybe, Elia, that's true. It can always be a lack of English language, I suppose, but maybe not. But it's just the way it is. So answering the first question of why is it stretched, that's no problem. But then saying what, then just use one tab, and I'm like, no, you know. So of course I know I can use only one tab if I wish to, but I unfortunately do not wish to. So we're gonna put everything here, put that in, put these two in, put these two in as well. No, we are not gonna talk about that. Okay. Yeah. No nonsense, way to go. I guess it's also a little bit Dutch. I mean, in general, we tend to be quite direct. So I love feedback, by the way. I'm a big fan of feedback, but I also like constructive feedback. So why is the screen stretched? So I explain why it is stretched so that people understand. But then I also explain, like, you know, this is the way I like it. I don't want people to see the tabs or the private folders I have at the top or the windows I have open at the bottom of my screen. And if then someone says, then just use one tab, I'm like, you know what I mean? It's no problem. There's no biggie. But yeah, it doesn't add. Doesn't change my my stuff here. Anyway, I'm just organizing my folders. 1 second here, because I need to figure out the WXY is, of course, the bearish scenario. So that means these two go here. This one also goes there. This is a bull. This is the other bull. Low time frame. Yes. Okay, cool. We ready? That's Elliott. Bigger MC, cheers. Hira, welcome. Good to have you here. That is a bit dramatic. Invalidation of a bull market would be 38.5k. That is pretty much your invalidation. Cheers, Alston. David, welcome. Can't please everyone, that's correct. Okay, the market is so flat at the moment. It's been a good day though. It's been a good day. Okay, let's start with the analysis. So I do want to start on the weekly. We're going to run through the bullish ones first and then the bearish ones. And of course, we always end with the probabilities. By the way, I have a question as well to you, which is I've been thinking about improving the content. And I think that one of the improvements may be to make things a little bit more simple. Now, it's not taking away the way I do my analysis, but it's sometimes going a bit less in detail of why a certain structure has higher or lower probability. So in the previous video this morning, I went quite deep on the 5-minute time frame and explained why the move up had a low probability like this one. Why this move up had a low probability of being impulsive. So I explained the structure in quite a lot of detail, but I could have just said as well, like, lower probability, this is impulsive, and then just leave it there. I don't know. It may be more simple, speaks to more people as it's easier to follow, but I try to present my scenarios in such a way that it is easy to follow anyway, but of course give a why behind the scenarios, like why is it high or low probability? Well, it's because of this and that and that, and then hopefully people understand it better. So you love the explain, yeah. So it's, I don't know. Co-cap. Yeah. What's up, P-Start Show? Very educated, personally like what you present. Maybe that's a good idea for your quick video updates. Yeah, maybe the streams. Yeah, that might be a good idea. Like the streams, I can go in depth and more explaining because we can spend more time together. And then the normal update videos will be a bit more simple, bit easier to follow for people that might not be, have too much info about Elliott Waves. Yeah, that might be a good middle ground. I'm gonna think about it. Okay, let's start, shall we? Let's start. Okay, gonna start with the bullish scenarios, and we're gonna start on the weekly time frame. So we have a 5-wave impulsive structure, 1, 2, 3, 4, 5, and inside 3 we have the green count, right? 1, 2, 3, 4, 5. Now, people that have been here will know this one already for weeks. We're talking about it. So this is your wave 4 common target area, respected 618 is your invalidation at 49.3K. If your wave 4 here is finished, which in this scenario preferably is the case, or at least, that would be nice. What you're going to be looking for in the lower time frame is an impulse to the upside. Right? So an impulsive structure to the upside, either 5 waves or a double 1, 2. And a 5-wave structure would be a wave 1, 2, 3, 4, and we look for a wave 5. Target for your wave 5 is between the 1.236 and the 0.618 that you see on my chart. Now there's 3 different ways to calculate a target for a wave 5. The first one is to take a fib from the end of 3 to the lowest point of wave 4 and then toggle on the 1.236 to the 1.618. That is where the 1.236 comes from. The second option is a trend-based fib from the low to the high of 1 to the lowest point here of 4. You can also take the end of your wave 4, but your wave 4 at the moment is not yet ended as we are still ranging, so I don't really use it yet. But then the 1-to-1 is over here, right? And then you have the 0.618 taken from the low to the high of 3 to the lowest point of your wave 4. Toggle on the 0.618. And that is the one you see on the chart here. Now I then like to only keep the highest and the lowest level on the chart so that it's nice and clean, and that gives me my area, 73.3K, 75.8K. Preferably wave 4 finishes after the 1-to-1 fib time of wave 2, taken from the start to the end of 2 to the end of wave 3. So preferably for your wave 4, this is not the end of your corrective structure. Preferably we are ending at a later stage after the 1-to-1 fib time, which at the moment, right, highest probability this is still a continuation of the range, so that is positive for this particular scenario. Because your wave 1 and your wave 3 are quite similar in length in price, it does give the opportunity for a wave 5 to be the extended structure. If so, the target for 5 is 91.3K, this, the 1.618 taken from the low to the high of your wave 3 to the lowest point of your wave 4. Invalidation for this scenario 65.5K. So we want to see a continuation of the range over here, but we don't want to reach the invalidation, right? We're going to talk about those low time frame scenarios now. So that means that inside wave 4, you're looking for either a triangle or WXY. Now I mentioned the invalidations earlier today. Price hit the invalidation over here. Is that a full invalidation of the triangle? Meh, right? We continue to observe, but a triangle doesn't look very pretty just yet. There's always the potential of at least a WXY. So your full triangle invalidation is this low. So now this low here becomes the new invalidation. And then wave C becomes a double zigzag in a triangle. You have your W, X, whatever, and then a Y. So as long as your invalidation isn't hit, there's always the potential for a triangle. The issue I have with triangles is I prefer to only look for triangles when a wave D is in. So I'm going to remove it. All the effort to put the invalidation on the chart. But I actually don't really like to look for triangles until your wave D is finished. And in this case, this would only be a wave C. And up until a wave D is in, the probabilities usually aren't highest for a triangle. So I prefer to look for a WXY. Now it's a very clean chart, as you can see, so I will add something on the chart in a second. But here you have a zigzag in a wave W, complex structure in X, and then you look for your wave Y. Inside wave X, we then have over here our W, our X, and then we look for Y. Make that blue, put the target for Y on the chart. From the low to the high of the blue W to the end of your blue X. Actually, the lowest point on my chart was this one. Toggle on the wave Y target area. The 0.618 to the 1.236 is your most common target area. The 1.618 is less common, so we remove that from the chart and make it a little bit smaller because we do like clean charts. Okay, put a box in place. Oh, I actually don't have blue. Might have to work. Oh, 1 second. Ashley, do I need to help?
No, it's okay.
Okay. Put the price on. So a triangle is still a possibility, but then I want to see a rejection here after a zigzag family structure and then move down again in a zigzag family structure. So it's not yet relevant until wave D is in. So inside wave X, we are then also looking for a complex structure, right? So we have our W zigzag, X flat, expanding flat, 3 wave A, 3 wave B, 5 wave is C, diagonal shape here at the end to finish a structure at the lows here. But then the only structure you can have in wave Y is a triangle or a flat, because W is a zigzag, wave Y in a sideways WXY is not allowed to be a zigzag. So it can only be a flat or a triangle. Now, as mentioned earlier today in the previous live stream, if this is the low of your wave X, that means that in wave Y in blue, you can only look for A, B, C, or a triangle like this. Now the triangle is invalidated because price took the low. So we can throw that one away, right? Which pretty much now leaves your flat in Y, where you're then looking for an A, B, and a wave C. Of course, before we look for such a move to the upside, proof of support is very important. We are at the lower end of the range. We are at a support. We wick the lows over here as well, right? So yes, but we of course preferably also see some local strength. And at the moment, we had bearish CVDs here, but that already played out. We do have some bullish CVDs on the chart. Higher low in price, lower low on blue. So there's a little bit of proof of support here. Now, we had some support, which now can turn into resistance. It didn't give like a lot of support anyway, because we just dumped pretty much through it. But this can act as resistance. So the moment a box has been passed, I keep it on the chart because it might still act as a resistance level. So flipping that level would also again be a little bit of proof of strength, right? A little bit of a bit of proof of strength. So inside wave Y, pretty much we're then looking for an impulsive structure to the upside. So on the lower time frames, we need to count either 5 waves and then look for a retracement, a 2 and a 3. We look for a leading diagonal, 1, 2, 3, 4, 5, correction, continuation, or a double 1, 2, 1, 2, 1, 2, and a continuation to move towards the target area 69.1 to 71.2K. We have resistance here as well at the higher end, 70.8 to 71.1, and this resistance is hit, but we still have a daily naked point of control at 69,650, which we didn't hit. So that would be the main area of resistance above this this high here. So very nice. Now after wave X, we're then looking for a wave Y to the downside, and a wave Y can only be a flat or a triangle because W is already a zigzag. Cool. We're going to talk probabilities at the end, okay? Your second bullish scenario, arguably your most bullish scenario, is a double 1, 2, 1, 2, 1, 2 continuation as long as the low isn't hit. Officially, it's not invalidated. However, you touch the 886. If you take a fib from the low of 2 to the high of your 1, we now touch the 886. And the 886 is very rare for a wave 2 because after your double 1, 2 and after this wave 2, you need to look for an impulse. So you want to see a wave 1, wave 2, continuation. The fact that price touched the 886 lowers the probabilities for this to be the end of a 2 and then another 1, 2 because the 886 is rare for 2, common for a wave B or a wave X. Increasing the probabilities any move up would be corrective in this particular case. The 886 is perfectly fine in the WXY scenario, by the way. It's just if this would be the low of 2 and you look for an impulse in a 1, 2, 3, it's low probabilities. So even if you do move to the upside, the probabilities are much higher to count this structure to the upside differently, right? Then have a 1, 2, 1 and 2 ending over here. Alternatively, your second wave 2, this one, of course ends at a later stage, right? So we remove this, and then your wave 2 is going to end somewhere here eventually. The problem we then get is that your second wave 2 is going to be incredibly long in time compared to the first two. And the green count is the higher degree Elliott wave count, 1, 2, 3, 4, 5 in green. And inside the green 3, we have the blue count, 1, 2, 3, 4, 5. So blue is a lower degree count. But your second wave 1 is bigger in price and time than your first wave 1. That lowers probabilities a little bit. But if then also your second 2 is so much longer compared to your first 2, it's all probabilities, it's a possibility, but it drops the probabilities a little bit. Now the first wave 2 can be counted as a zigzag, and a zigzag generally is a short corrective structure. Short in time, deep in price. Your second wave 2 can be a WXY, and a WXY tends to be a longer corrective structure. So it's not that a double 1, 2 and the second wave 2 can't be longer than the first one. It also depends on the individual structures. If wave 2 here in blue is a WXY, naturally it has a higher probability of being longer than the first wave 2. So it's just probabilities, right? Generally the second wave 2 is a bit shorter. By all means, you're going to look for price to move up. And if you do take this low, 66.2K, yeah, I mean, well, then for sure this is not the low of 2, but I can better remove it because it's not relevant. So we need to find a wave 2 at a later stage here. Also means your bullish scenario here is now invalidated, as explained in the live stream earlier today, yesterday, I think the video yesterday as well already. This move up did not look like a bullish impulse. Either 1, 2, 3, 4, 5, a diagonal, or a double 1, 2. for the reasons explained in that piece of content or the multiple pieces of content. Lowering the probabilities, this is impulsive. Increasing probabilities, this is corrective, which in turn increases the probabilities to either continue ranging or move down. Well, the second happened, invalidating this. Very nice. We can cut that one out. Beautiful. Okay, and then finally the bearish scenarios, and then we get to the probabilities. First the explaining part. Naked point of controls are invalidate. The moment they get wicked, they're invalidated, as then the volume is hit. It's a volume area. So the moment you wick it, it's invalidated. Yeah, for me, on my chart. Yep. Okay. The bearish scenarios. On a weekly time frame, 1, 2, 3, 4, 5. Preferably this wave 4 is not yet finished. We are looking for a bigger range to the downside, ending inside the common target area for 4, 23605 from the low to the high of your wave 3. Mind you, by the way, it does not have to get back down here. Reason is, this wick already touched the 0.236. And in a scenario I will show you in a second, which is a WXY, wave Y does not have to go below this low here. It can also end over here and move up without coming back inside this area, okay? But this is the common target area for 4, which has been hit. Now time-wise, preferably you end at least wave 4 after the 0.382 fib time, taken from the start to the end of 2 to the end of 3, comparing 2 with 4. And the 0.382 is sitting on the 6th of May. Of course, we're already past the 382, but we want to end a corrective structure here. Commonly, wave 4 is longer than wave 2. So, wave 4 can also end after the 1-to-1, which is the 12th of August. But wave 2 is quite long. So there are probabilities, therefore, for wave 4 to be shorter than the 1-to-1, but preferably it ends even after the 1-to-1. So that would be a lot of sideways ranging months to come in that case. Now, the bearish scenario on a daily time frame to continue that range has to be either a WXY or a zigzag. In the WXY, as explained just now, we then have a regular flat, a wave X, and then we look for a Y. Wave Y can be a zigzag, a flat, or a triangle, but a zigzag is most common. After that, the flat, which would be hilarious to basically swing the highs here, take the liquidity, move down impulsively. I mean, would be nice. And then a triangle is the lowest probability pattern in a wave Y. Target for your wave Y, 0.618. To the 1.236 from the start to the end of W to the end of wave X, 63.2K, 54.3K. The 1.618 extension target, low probabilities. It's not really a target you want to hit. Preferably the wave Y ends after the 382, 4th of June, taken from the start to the end of W to the end of X, as a bare minimum. The most bearish scenario, however, is an ABC. Leading diagonal A, zigzag B, building multiple 1-2s to move down for your wave C. Target area for C, 54.6, 50.5. Between the 1 and the 1.236, taken from the start to the end of A to the end of wave B. Invalidation, all-time high. Preferably this scenario ends after the 0.382, taken from the start to the end of A to the end of wave B, which is sitting on the 8th of June. So we still have about a week left before we then want to end wave C. Of course, in this scenario, we're aiming for corrective structures on the lower time, or impulsive structures on the lower time frame. So what we are looking for in that case is a leading diagonal that you see on the chart. I'll explain it in a second. Or a wave 1, 2, 1, 2, 1, 2, and eventually a big 3. What is a bit of an issue for this scenario is that the weekend is coming up. Because if you do want to start a wave 3 to much lower prices, then preferably that doesn't happen during the weekend, because the weekend is notorious for its sideways ranges instead of a very impulsive wave 3. Anyway. Also, the probabilities are higher. This is a 3-wave structure compared to a 5-wave structure. So at the moment, probabilities are higher for a diagonal instead of a multi 1 2 1 2 and then further downside in a big 3, because this is very much a 3-wave structure by probability's sake. And in a multi 1 2, preferably your second wave 1 goes below the first wave 1, preferably, right? It's just probabilities. And your third one goes below the second one. So you create a bit of a diagonal, 1 2 1 2 1 2, boom. Right? But that boom is a little bit of an issue during a weekend. Anyway, therefore we have a diagonal. In a diagonal, all of the waves can be 3-wave structures. Wave 1 and 2 are finished. We're looking for wave 3, which has to at least go below this wave 1 here at 66.2k. If you take this low, it will increase some probabilities for the bearish scenario, which is this one, but also the higher time frame, WXY or zigzag, right? Now after wave 3, which preferably ends in the green box, as that is the common target area, 786, 886 trend-based fib from the start to the end of 1 to the end of 2, 66.1 to 65.5. We then look for support and price to move in a 4, should be a zigzag family structure, and then 5, zigzag family structure. Looking at support, we have the blue box, 65.1 to 65.3k. It is just below the 886. You don't really want to hit the 1-to-1 if price moves down, because the 1-to-1 is will lower the probabilities for a diagonal. So preferably you stay above. Commonly, you will hear me say that I only really prefer to look for diagonals when a wave 4 is in. However, because of the 3-wave nature of the moves that we have so far, the only really bearish scenario at the moment would be this diagonal. So even though wave 3 is not even finished, I do have a diagonal on my chart, just because the 3-wave structure to the downside in your wave 1 here. But the probability only, or this scenario only really starts to get increased probabilities if you take the low at 66.2. We're now hovering above, of course. CVD, we prefer to use local CVD, of course. Bit of bearish CVD is building here. Lower high on price. Higher high on yellow and on blue. We also have bullish CVD at the same time, though. So higher low, lower low on blue, and bearish. So a bit of both. 1, 2, 3, 4, 5. There is the potential, at least, for a impulse up. Let's have a look. And then we want to see a bit of a deeper retracement. So your 382 is hit. That's a minimum target for a wave 2. Okay. Not to forget, we are at support. So in this case, you then have your 1, 2, 3, 4, 5, right? It's quite a nice 5-wave structure of the low volume. This is common, by the way. Your first wave 1 after a dump lowers in volume. So yeah, no problem. You hit the 382. That is at least a target for a wave 2. Preferably though, your common target area is between the 05 to the 786, 66, well, arguably 67k to 66.7k. That would be a nicer target. And then finish before the 4 fib time, preferably 1st of June, which is tomorrow, 12:30. But yeah, we have bullish CVD divergences here. Not bad. It looks like a solid 5-wave structure to the upside. 3-wave move down might still result in a flat or continuation, of course. A, B, C, golden pocket up. This is now an order block, so this is your support, structural. Yeah. Did we touch the 886? Oh. Did we? Oh, we just missed out on hitting the 886. that would give even more probabilities to actually take the high. We got very close though, so, but yeah, close is not actually touching it. But it doesn't look bad, no? But preferably, I mean, this is your common target area, but you do have bullish CVD. So let's keep an eye on this. Now, with regards to the probabilities, going to the higher time frames, showing you each scenario and talk about the probabilities from an Elliott Wave point of view. On the weekly time frame at the moment, right? On a weekly, it's about the lower time frames now, right? So we have this scenario here versus this bigger wave 4. Both are bullish, both are looking for upside. It's just that your target is different, but it's mainly about the daily. So the probabilities here at the moment are neutral. We just, in both cases, you look up. If I also had a big bearish scenario, which I have in my folders, it's just a lot lower probability. The bullish scenarios have a higher probability on the weekly time frame. So that's why between the two bulls, it's neutral till local time frame price action will give us more information, no? Which then also brings me to the more local stuff. If price takes out this low, 66.2k, it will add a bit more probabilities to the bearish scenarios where you're looking for a bigger wave Y down or a bigger wave C down. But more importantly, if price moves down and hits 65.5k, that is when probabilities increase, very much increase, by a lot for a WXY or the ABC, which are the two bearish scenarios on the daily. So we still have a little bit more to go, right? We're not there yet. In other words, as long as you don't really take these lows, it's not that easy to say bearish is higher probability for now. Bit challenging. Let me have a look here. Where's that scenario? The WXY, right? Now between the sideways WXY, the one on the chart, meaning price moving up, and the diagonal, price moving down. As mentioned, I prefer to look for diagonals after wave 4 is in. We're still working on a 3. So naturally a diagonal is not great probabilities unless you actually come down, back up, find resistance and start moving down. Also, your wave 3 is already quite significantly longer than your wave 1. Take a fib time from the start of 1 to the end of 1 to the end of your wave 2, and you can see the 1-to-1 here is passed. We are still before the 2, right? There's no problem here, but it is starting to get pretty long. So again, price takes this low, the probabilities increase, but as long as you don't really take that low, it's difficult to really have the highest probabilities to very bearish or more bearish scenarios at the moment. So that brings me to the WXY here, which of course very much depends on local price action. So yeah, the WXY would carry a bit more higher probabilities. 1 second, checking. Common target area for a wave C or Y is where we are ranging at the moment. Gonna talk to myself for a second. So this move down is either an A, C, or a 1. or it is an unfinished corrective structure. If this is a wave C, it needs to be part of a flat ABC, and your wave B hit the 1.618 fib from the start to the end of A, which is not very common though, that it does. Would increase probabilities for an A, 1 or an unfinished 3-wave corrective structure. Thinking. Let me show you this, by the way. So because price hit the 1.618, the probabilities decrease that this is a wave C. In the WXY scenario, we want this to be a wave C. However, because of the 1.618 touch, the probabilities would be lower for this to be a wave C compared to other structures, like a wave A, 1, or an unfinished corrective structure. So that would then indicate lower probabilities for this scenario compared to the bearish scenario. We do have a 5-waver, 3-wave, almost 886 touch, bullish CVD at support. So I think looks like a finished 5-waver. 1, 2, 3, 4, 5. This must be either a finished impulse or it's a 3-wave. But if this is a 3 correction, this has to be a 3 as well. So there has to be an impulse, correction, impulse, if you want to count this A, B, C. Probabilities locally will impact probabilities on all of the time frames. So that is why it takes some time to think about this. Yeah. So this is my problem. In the diagonal, we didn't even finish a wave 3. So how can we give the highest probabilities to a pattern that didn't even finish 3 waves out of the 5 that it needs? And then you still need a 4 and a 5 as well. Unless you have 1, 2, 1, 2, 1, 2, but this is very much a 3-waver. So, okay, here we go. So the probabilities, let me write key level here. Key 1, this is key 2. And locally, highest amount of volume to the downside is in the low now. So let's do this as well. Put key here. Okay, I'm gonna talk about this in a second. This move is longer. I'm preparing my words on the chart now. Yeah, it is longer. Let me keep this on the chart as well. Okay, here we go. I like that comment. It's because my eyes are stretched as well, you know. I don't have normal eyes. Alien eyes. My whole world is stretched. So probabilities, there you go. The probabilities are higher for a sideways corrective structure in either the WXY, this one, or a triangle, which can't yet have the highest probabilities because we have then a wave A, B, C has to be finished, D, and then E. So up until we don't have D, we can't yet give it the highest probabilities. So a sideways structure, in other words, a move to the upside, would have higher probabilities. And the reason is that in the bearish scenario, for a diagonal, we have not even moved below the low of 1 for a wave 3. And a diagonal only really starts to increase in probabilities if you have a finished wave 4 and we're still working on a 3. We don't even have a 3. We didn't even move below 1. So I can't really give probabilities to a like higher probabilities to a scenario that is a 5-wave structure, but we don't even have a finished 3. We didn't even take the low of 1, which is a minimum. So probability-wise, it makes life simple, right? Trading-wise. But the probabilities would be higher to continue the range unless price takes this low that will put a little bit of eggs in the bearish basket, 66.2k, and especially if you hit this high. If you hit 65.5, the probabilities for the bears will significantly increase and outweigh the probabilities for the bullish scenarios. And but it starts by taking this low. That is when you go into, okay, you know, we start to think more about the bearish scenarios, and especially if you hit 65.5, which is a scenario you want to hit with the bearish scenarios, right? That is when the probabilities will significantly increase. But I can't give the highest probabilities to a scenario that doesn't even have a finished wave 3 or 4, and it's a 5-wave structure. And the weekend is coming up, generally ranging structure. Another thing is, with regards to probabilities, if price hits this line at 68k, it will increase the probabilities that this is a 3-wave structure, which increases the probabilities for price to move to the highs and upside. And the reason for this, right, is your second leg down is longer than your first leg down. Wait, one step back. And the reason is, if this is your high and you're going to move to the downside in that wave 3, right, the bearish scenario, or an impulsive scenario anyway to the downside, what you're going to be looking for is an impulsive structure. So you need to have a finished 1, 2, another 1, 2, whatever. Or 1, 2, 3, 4, and then a wave 5. 1 second. W, X, and then eventually a Y. So then this becomes your wave A. You're going to be looking for a B, and then a wave C to the downside. Or we have a diagonal, but it's too early to call diagonals because you only have your 1. You need a 2, 3, 4, 5. And okay, here we go. So because this second leg is longer than your first one, it reduces probabilities for a double 1, 2. 1, 2, 1, 2, 3 down, but also for this to be a diagonal 1, 2, 3, 4, 5, right? Diagonal structure, because your 3 is longer than your 1, which is not an invalidation, but it lowers the probabilities. However, if you hit 68K, this invalidates a wave 4. I mean, arguably your invalidation is actually a little bit lower. Because if this is a 1, 2, 3, 4, 5, wave 4 should not overlap with wave 1. So that if price moves up to 68, it increases probabilities for the bulls. Okay. Right. And also it's because of volume. You currently have a move down, which has a lot, like, much higher volume than we had to the downside here. So in an impulse, preferably this is your wave 3, and then you still get another 4 and a 5. But if price overlaps with this low, it invalidates a 1, 2, 3, 4, 5, meaning you can only then count a double 1, 2 or a diagonal. But a diagonal is too early, and in a double 1, 2, your second one is longer than your first, lowers the probabilities a bit. So look, the divergences on the 4-hour time frame have played out as we took the lows. So these are neutralized, and we're like in the middle of like two levels now. You're between 66.2 and 68. Move up to 68 and probabilities increase to find more upside. Move down to 66.2 and the probabilities will at least increase a bit for bearish scenarios, and 65.5 they increase a lot for bearish scenarios. So unless you take the low, the probabilities are higher to continue ranging between 72 and 66.2, which is upside. A triple 1, 2 here doesn't look great. 1, 2, 1, 2, 1, 2, and then eventually a big wave 3. So 1, 2, 1, 2, 1, 2, boom. As your first structure looks very much like a 3-wave move and not a 5-wave move. So if we go down, I prefer by far the diagonal. But in a diagonal, you at least need to take the low of 1 to give it higher probabilities. As a bare minimum. And even if you take this low, if you don't hit 65.5, it's still neutral. So yeah, I can't say any, like, probability is higher to just continue ranging. Unless you hit 66.2 as a bare minimum, and preferably 65.5. That's a real changer in probabilities. And locally, if you move up to 68, that is when it will increase local probabilities for future upside. Of course, you can do this and continue ranging here for a bit and then eventually move up. It's weekend, so the weekend is notorious for ranges. So 68K is important, and 66.2 is important. And now we're in limbo. Probabilities on the 4-hour played out. We took the low, either looking for an unfinished 3-wave structure, wave A, C, or 1. Move up here has higher probabilities of corrective compared to impulsive. Right, so the probability is high to take the lows. Move down, took the low. Now we look 68 or 66.2. Locally, we had some bullish CVD divergences. These have now played out as well. We just identified these, right? Wait, let me keep this on the chart actually. So we had some bullish CVDs. These have now played out. There is still the potential here for a flat to move into the target area for a potential wave 2. If it does, we'll never know. Uh, 400. And if price is going to move to the 1.618, it reduces probabilities for a flat. Okay. In other words, probabilities increase to continue in that case. For at least a zigzag, if not higher. Common target for your zigzag is between the 1 and the 1.236, which is literally at that invalidation as well. That's interesting. Bullish CVDs have played out. These ones. Target for the CVD was taking the highs. Took that. So yeah. Oh yeah, by the way, we hit the 382 already here. It's just a little less common for wave 2 to hit that. Okay, I think we're kind of good now. So the probabilities are higher to continue ranging. In other words, move up as long as you don't at least hit 66.2k as a minimum, because that's the minimum target for wave 3 of a diagonal, and a diagonal doesn't even have a finished wave 3 out of a 5-wave structure, so we can't give it the highest probabilities unless you at least take 66.2k, please, and preferably hit 65.5k. If you hit 65.5, then the probabilities for the bearish scenarios increase on the daily time frame. So in other words, we can expect to continue the range between all-time high and 60k for a longer period of time, maybe even 50. But as long as you don't even hit 66.2 and after that 65.5, it's too dramatic, as there's no confirmation. A flat would be quite interesting here. 3-wave A, 3-wave B, 5-wave C, find support at the order block. 1 second here. Is it a 50-minute one? Yes. That's good. Huh? Right on top of the golden pocket. We don't know if it comes back down, but that would be interesting. Fifth time. Wait. Give it the benefit of the... No, okay. Okay. Very nice. Of course, you then want an impulsive C to the downside if you do move down. We touched this gap now as well here. And if you hit the 1.618, the probabilities are higher to look eventually for higher prices. Be mindful of an order block here as well, by the way. But yeah, then you're not counting a flat anymore. Low probabilities if you hit the 1.618, lower. So probabilities are then higher to move up. So I mean, yeah, I mean, I've communicated the probabilities, of course, as we went through the analysis. On the weekly time frame, bullish. On the daily, you're in limbo. On the 4-hour time frame, it would be higher to continue the range and move up as long as you don't at least hit 66.2. It's such an easy invalidation. If you hit 66.2, then that is when your probabilities will slowly turn to bear. And if you hit 65.5, that is when it increases a lot more for the bears. But yeah, we haven't hit it. So yeah, there you go. We hit the 1.618 now, by the way. So we can remove this and then remove this. Gosh, I love Elliott Waves. So yeah. That's that. Oh wait, can remove this. Okay, time to answer some questions and stuff, no? Okay, there you go. I'll quickly scroll up and move down. Oh yeah, so this was the quick feedback question. I'll probably ask it in Discord as well. I love the streams because they're a bit slower and I can ask questions. Yeah, that's a feedback by the way, volume increasing as price is moving up. That's also feedback I get with the streams. Ask questions, more educational, of course. TA at 18 mins. Oh, yeah, there you go. Correct. Cheers, David. Always a pleasure. Always a pleasure. Objectivity. I mean, in trading, it's that's what you need. No, I mean, honestly, the thing is, I do think if you are too invested in the asset, either a certain, like, I don't know, you build a relationship with the asset, or you have way too much money in your spot bag, or whatever it is, you might get that bias maybe. But as a trader myself, we hit the 15-minute order block here now, by the way. Yeah, as a trader, I don't care if price is at 100k or 10k. Yeah, I just trade up and down. I'm with friends, so I can't listen, unfortunately. We'll have to watch it later, but I'm really curious what the probabilities are now. Good luck. Oh, well, there you go. Yeah, have been communicated. But Sibel, enjoy your night with friends. It's important to spend some time with the people around you. Why do they use letters when charts are based off numbers? That is a great question. It is also a question I can't answer. That would be a great question for Mr. Elliott himself. Why did he think of ABC? And then he has WXY, as in, like, where's the rest of the alphabet, you know? Good question. I'm officially retired as a all-time from Elliott Wave account. I'm going to go back to being a scalpy boy, and you do the brain work for us. I'm happy to do the brain work. Yeah, I mean, it's kind of like my job on YouTube, no? Oh, what's up, Sheila Head? Yeah, it's a pleasure. I mean, the previous stream was short because of I had a meeting with my business coach this afternoon. Which was a great meeting, and So yeah, it's a meeting where we spoke about numerous topics. So just to let you join into the ride, so we spoke about, of course, the YouTube channel, and something that I'm planning to do soon on the channel. So there will be a new playlist that will be added to the channel with 1 second. Let me count the amount of videos that are going to be in there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 videos minimum. And it's likely going to be after launching. So at launch 18, and then after launching probably another 1, 2, 3, probably minimum 4 extra. So it's something that I'm working on, which I discussed with him as well. We also spoke about marketing, because I'm not that much of a marketing type of guy. I just like what I do, and it either works or it doesn't, but I'm not really involved with marketing and stuff. But we did speak about marketing as well. We also spoke about the balance between work, social life, sports, and sleep, and the ability to switch off, which is not easy when you have a YouTube channel with a very active Discord community. The good thing is that all of you in Discord are incredibly well behaved, and I thank you for that. We never really have any like real problems going on, and if so, it's just small stuff. So that helps me, of course, as well with managing things. But the balance between work, social, sports is actually very, very important, of course, and sleep, not to forget. So we spoke about that as well. We spoke about potentially working with another company when talking about marketing and branding, that sort of stuff. A website. We spoke about potentially, stuff that I can't yet talk about. Those are plans that will come eventually. It's not short term. We spoke about these type of things. So yeah, business. We spoke about. And of course, I'm also a global keynote speaker. So there's always a bit of speaking involved. So we always at least speak a bit about speaking, and like events and global events and national events, which is always included as well. So yeah, there you go. Yeah, it also makes sense. It's the way we're trained, I suppose. So I answered this question during the video. Some quality time with my wife was good. Very nice, Peter. That's what I like to hear. Happy wife, happy life, no? What's up, Sithrix? How you doing, Maverick? Welcome. Mr. Brownbug, how are you doing? How are you doing? How are you doing? It's been a while indeed. But thanks for popping in and saying hi at least. I appreciate it. The depth probability stuff is very important for education. Usually, yeah. I'm thinking maybe the video. So of course the way I present these scenarios will remain the same. It's just about how in depth do you go. I think in live streams I can more easily go in depth because I can answer questions if people don't get it. I can explain a bit more about a structure because I also have more time. So I in a video feels a bit more pressurized. It'd be like a bit more pressure because you wanna give as much information as you can in a relatively short amount of time. So maybe the videos will be a little bit less detail, but still, of course, probabilities and why this scenario, but not like nitpicking. While in the live streams, I can because I have more time. So in the videos can can be good for both experienced Elliott Wave analysts and beginning ones, or people that maybe don't know Elliott Waves that well or at all, but they'll still be able to follow, in a way at least, you know. While the live streams, I can go a bit more in depth. And even though in live streams, I can talk about more complex stuff and really in-depth stuff, more geared towards experienced people, or at least people that know Elliott Waves, because I have more time and therefore I can explain more, I can take people along that have no experience or very little experience, but help them understand the why as I can answer questions. So I think that might be a good balance to make the videos on the channel more for a broad audience, and the streams is still broad, but also with a lot more detail. I know, it's just I'm just thinking, you know, it's nothing there yet, but you know. Monday continuation of the Friday trend. Potentially. It's now weekend, of course. Oh well, it's not yet weekend. The markets are almost closed at least. Just gathering info for the weekend. What's up with you? What's up, traders? Tortuga. I'm short on Bitcoin and ETH. Think money. Good luck with your trades, right? Make sure you manage them well. What is a triangle and where can I find it? And what kind of signs does it give me? I love talking about triangles, but going in detail on triangles, of course, takes a little bit of time. So first things first, I will talk about a triangle, but I recommend you to go to this website. If you go, you know, open the description and you scroll down, you'll find a title called Elliott Wave Education, right? And if you look at, I think, the second link with the laptop logo in front, that's this website. It's free, it's public, it doesn't cost you anything. I'm not affiliated, but I really love this website. I used it a lot when I learned Elliott Waves back in the day. So then you go to your triangle section, right? Info, you know, you can read it here. You have the pictures with some targets and stuff as well, right? Now, what you have to know about a triangle, and of course, there's always some stuff that you don't read but learn from experience, is if you have your wave A, your wave B, C, D, E. First of all, the most common triangle is a contracting triangle. The second most common is a running triangle. The third most common is a barrier triangle. And the fourth is a expanding triangle, which is the most rare one. 4 out of the 5 waves in a triangle have to be zigzags. Now, let me be clear here that the moment you have this sort of price action and you see people already saying triangle, be very mindful and also very scared. Until a wave D of a triangle is finished, a triangle will never have the highest probabilities. Higher probabilities go out for WXYs, flats, or zigzag structures before moving into a triangle, right? So you want a wave D to be finished. Now, 4 out of 5 waves have to be zigzags, either simple, and only one can be double or triple zigzag. Meaning A, B, C, D. Oh, oops, that's the wrong. We have our A, and then B, and then C, and then D, and then we have E, right? 4 out of the 5 waves have to be a zigzag. It can be 5 out of 5 as well. But if one wave is not a simple zigzag, ABC up or an ABC down, right? ABC up or ABC down, then it's usually a wave C or wave D, most commonly C, that is a double or triple zigzag, right? So 4 out of the 5 waves have to be a zigzag structure. And if one wave is not a zigzag, it's usually C or D, commonly C, in a double or triple zigzag. So all of the waves have to be part of the zigzag family anyway. Right? Wave E by itself can become a triangle as well, but that's very rare. Generally in a triangle, volume tends to decrease. That's not a rule, that's a guideline. Wave E likes to overshoot the AC trend line, meaning you move below and then, fake out. Wave C, in any contracting diagonal, wave C can't go below A, E can't go below C, D can't go above B, B cannot go above A, except for a running triangle, then that is when it is allowed. This is the basics that you have to know. Wave B, common target for B, C, D, and E in a contracting diagonal is the golden pocket to the 786. The 0.5 is a little less common, same with the 886 as well. As a target, that's a Fibonacci target, and preferably every wave is a little bit shorter or similar in time compared to the previous wave structure. Important tip, if you see people counting a triangle like this, A, B, C, everything fine, perfect, and then D, E, and then this, there's a problem. Start running, right? Because a triangle is a lot about ratio as well. And of course, this does not make any sense. It's not a triangle, right? If people call this A, B, C, D, E, you got the wrong channel. It's not a triangle. It's the wrong ratio. We also hit the target area for a wave C now, by the way, in the meantime. So yeah, that's some of the stuff that you have to know about a triangle. Yeah. What's up, Lucian? How you doing? I'm staring at the screen while Koens works. Relaxed. Check the Fib retracement for the wave 4 for there to not be another wave 4. It hit like the 146. Oh, this one. Yeah, it's very, of course it's a long 3 and then, but it's the only way on at least on a 50 min. You know, we can count 1, 2, 3, 4, 5 without going into too much detail here. It's pretty much the only way to count an impulse. So yeah, where did I learn everything? I mean, websites, the Elliott Wave book. So the website that I recommend is in the description, right? The book is there as well, Elliott Wave Printable by Frost and Prechter, which I recommend. It's a fun book. It's a nice to have, not a must have. The website is arguably better, and that's it. And then it's just implementing. So, of course, I've been at it for a couple of years now. 3 years and 3 months to be exact. And it's implementation. So, yeah. 67,300. Very nice. Good job. Manage it well. Thoughts on BTC dominance? I would need to check that one out. Let me go through this first. I don't really generally keep too much track of the dominance. The thing with dominance is you can't really count it. I mean, you can't go above 100 and you can't go below 0. So you can never have an incredibly extended wave up because you can't go above 100 or below 0. So generally what my perception is with the dominance is all the bigger bear markets are going to have a 3-wave structure down and all the bull markets are going to have a 5-wave structure up. And then the bear market will have a 3-wave down and the bull market a 5-wave up and ta-da-da-da-da. And it's literally just going to go up and down in a range forever. Because you can't go above 100 or below 0. So, I mean, that's pretty much Bitcoin dominance in a nutshell. Of course, like the higher Bitcoin goes, the more people invest in Bitcoin, the more altcoins come out, the more diversification there is. So potentially the highs on the Bitcoin dominance might go down over the different bull markets because there's more assets in the industry. But it's pretty much 5 up, 3 down, 5 up, 3 down. And that's pretty much the dominance in a nutshell. So what you're going to be looking for, where am I typing? Oh, wrong chat. So I'm now, of course, I'm having a look at it anyway. So pretty much what you're going to be looking for is 1, 2, 3, 4, 5, 1, 2, 3, right? And now you're looking again for a 5-wave structure. 5 and then 3 and then 5 and then 3 and then 5, and it's a percentage chart. You can't really count a percentage chart very nicely. because you can't go above 100 and you can't go below 0. So yeah, you know, I have these two areas because these are gap tops, so we almost pretty much hit 57.21%. But yeah, probabilities would be higher to continue to the up and see. I mean, that's just dominance. You just want to see this. That's why I have a channel on my chart here, because this is where the dominance stopped out previously, and this is the low of your range. So it makes sense for dominance to move up really. I mean, I can even remove the count a bit. We just want to see a 5-wave structure. This was pretty clear. 1, 2, 3, 4, 5. That's fine. Bit more difficult here, as this is, you know, this. Of course, if you're bullish, you want to actually see this, right? So it feels a bit rangy, you know. This is your low. 1, 2, 1, 2, 3, 4, 5, 4, 5. Could that be a wave 1 and then look for a 2 and then a 3 and a 4 and a 5? Yeah, potentially, but I'd still be looking for higher. It's a percentage chart, so you can't really count a percentage chart too well, because you can't go above 100 or below 0, which makes the dominance chart a bit more complex, of course, to count. Yeah, it's a fun chart. It's a fun chart because it's so different compared to all the other charts, because you just go horizontal. Sweet. Probably for clarification, because there are so many ways and you need to see what's what. Yeah, you need to see what's what, but it's also the experience of recognizing structures by looking at the volume and the trend-based fibs and the fibs, other stuff you like to use, right? So it all comes together. Factor Cole, what's up? And as usual, I have a question. Always feel free to answer or to ask questions. But yo, thanks guys for supporting the channel and watching the videos. You know, it makes my day. Can you name 1 or 2 times in your Elliott Wave career when Bitcoin extremely surprised you? That's a fun question. 1 second, I'll go from up down. Definitely looks like we are in a wave 3 now, personally. Hoping to hit that invalidation, give more confidence. Yes, you would need more, like you need to hit at least 66.2, if not 65.5. I guess you're talking about a wave 3 to the downside. To give more confidence on the long. Oh wait, you're talking about, oh, okay, never mind. You're talking about low time frame, 15 minutes, wave 3. Okay, 1 second. In that case, I'm not sure if I actually want to pull a fib from like this, because you at least, of course, want to have 1, 2, 3, 4, 5. The thing is, this potential impulse is so young, you might as well have a double 1, 2. So what I prefer to do is, if you change market structure before taking out the high you have here, probabilities increase. This is a 3-wave structure. And that would, for the bulls, mean 1, 2, 3, 4, 5 diagonal. That's going to be a very sideways weekend. And for the bears, it means zigzag, probabilities to go down. In other words, the moment you move down now before taking out at least this high here, the probabilities are higher to continue ranging or move down. So that's going to be a level you want to keep an eye on at least. Okay, interesting question. I always like the question. So can you name 1 or 2 times in your Elliott Wave career when Bitcoin surprised me? When Bitcoin surprised me. Well, when Bitcoin surprised me, like surprised, what is surprised? Of course, So of course probabilities are changing, and as new information comes in, my probabilities can change. So a surprise would mean a scenario where it would have gone against probabilities. In that case, on a daily time frame, the probabilities are, of course, for a wave 2 a lot higher generally to move to the 0.5 to the 786. Price went to the 382 and then moved up. Now that is on a daily time frame. That's quite surprising, right? It's a very shallow retracement. However, on the lower time frames, the moment we finished this here, and we had bullish CVDs and the potential for a double 1-2, that is when probabilities started to change for me, when we got a volume candle up. So when we were here, the probabilities were still higher to move down further, to also take this low, which we've never done because Bybit wicked all the way down here. So arguably this was a surprise low. And I only joined myself when we were here. At least that is when I got more confident and probability switched to looking for price to move up and take out the high. Yeah. So that would arguably that would have been that was a bit of a surprise low, I suppose. I guess another surprise would be this low. And by the way, I learned something from this low. I'll never forget. I'm not sure if I can show you this. Nah, I need to go to the lower time frames. Anyway, this being the low before the impulse up. So we're talking about 2021 right here. So it's already, I wasn't as skilled as I am nowadays, but I did use Elliott Waves. And I was confident myself that if we could move out of this range, we would be seeing all-time highs. And that is because we moved down here impulsively and we started ranging for so long. I was quite confident if we get out of this, I'm looking for all-time highs. But catching the moment is quite difficult. And this low, right, we take a fib from low to the high here. Touch the 886. And for a wave 2, the 886, of course, is a bit shit if you're looking for a wave 1 and then 2 and then a 3 up. So we made this low and it literally hit the final little bit of support besides the 886 on the lower time frame. If you can go to a 50-minute chart and go back this far, you'll see a small little range at the low. A small one. If you pull a volume profile of that range, the low here was made on the point of control of that small little range. And since that moment, I have never, I always check for point of controls of small ranges at wick highs or lows and put these on my chart or keep an eye on them, because I know I've learned the lesson. Now I didn't miss the whole thing. I entered later. I think somewhere here, the moment again I saw volume coming in as well, right? So that is when I kind of I was like, oh, you know, we might be moving. So yeah, I think those were two moments where Bitcoin surprised me. Yeah, I guess that's a fun question. Nice one, nice one. Very interesting, interesting question. Cheers, Vector Call. There's $100 difference in your chart and mine. Yeah, different charts. I mean, I have a Bitcoin playlist here. Playlist. I mean, 67.6, 6. Okay, so at least mine are all in the 600. So not too much difference between those. Not ICT nerds or hurt. If possible, when you're giving info, please slow your pace. I'm crossing. No problem. I do tend to speak quick, which is a weakness. So I have to pay attention to that. Yeah, especially in my videos. The thing also is, if I can simplify the videos a bit more and I talk slower pace, it becomes even easier to understand. So I do realize I need to talk slower. Yeah. Yo, Shulahead, pleasure. Thanks. Let me wait. I need to screenshot this. Well, thanks, Shula. I'm gonna send this to someone. Wait. Always makes me smile. Hopefully it's valuable. Where's the chat? Cheers, Shulad. Appreciate it. Triangles are the best. Pain in the ass, but yeah, a triangle. Once you have the ability to identify a triangle, triangles become easy to trade. But as long as a wave D is not in, they're very very scammy in a way because of the fake outs that tend to happen. Yeah. That is true. I also think, Daniel, I think you made a screenshot of it and also posted in Discord. I was in the train. I was sitting in the train. And I'm often lurking in Discord as well when I'm traveling. So I was in the train. I was checking Discord. I think I saw a picture, but I'm not sure if it was you. Yeah, good trade. Good trade. Manage it well, of course. But yeah, brilliant. Very, very nice. Slow learner. Yeah, I also realize not everyone, of course, for many, English is also a second language. Also for me, by the way. So yeah, I should turn down the speed a little bit. What's up, FYR? Arco? Cheers. Thanks. How do you use FIB time? I have stuff coming for this, also publicly, but FIB. So with regards to FIB time, very simply, if we have an impulse, 1, 2, 3, sideways, 4, 5. Now this will be very quick what I'm going to say. Please keep in mind I have stuff coming that explains stuff in more detail. But you use FIB time too. Again, this will go quick. Compare wave 2 with wave 4. Compare wave 1 with wave 5. Right? Compare wave W with Y, W with X, A with C, A with B, A with B, B with C, C with D, and D with E, or E with D in a triangle, right? W and X, and of course WY as mentioned, but also Z. So W and Z, preferably W with Z. And how you use it is you take a FIB, and 1 with 2, you take a FIB time. So if I want to compare wave 4 in time with wave 2, what I do is I take a FIB time from the start to the end of 2. I click 1, I click 2, I select this piece of price action in time, and now that I've made the selection, I now select what I want to compare it against. So I take wave 2 and I'm going to compare it against wave 4, meaning my third click will be on the top of 3. toggle on the wave 4 fib times, right? And then preferably your wave 4 ends after your 1-to-1, because generally wave 4 is longer. And you can do the same with wave 1 and 2. Take a fib time from the start to the end of 1, and then double click here, and wave 2 is more often a shorter, simple corrective structure and deep. So preferably ends at least after the 0.382, right? And then you have all the other stuff I just mentioned. Wave 1 and wave 5 have a relationship, WY, AC, WX, B, WZ, WY. Yeah. So you click, the first 2 clicks is you select the piece of price action that you want to compare against with future price action, and that's your 3rd click. But I have stuff coming which will make you very happy. Of course, yeah, there's definitely that potential. I mean, if we do, I mean, so far, as long as we don't hit 68K, you know, there's still that chance. It's also, of course, very low time frame. 1, 2, 1, 2, 3, 4, 5, 4, 5. It's so I don't really like to count the internals here. I just see green candle, couple of green candles. This range is longer than that range. Okay, 1, 2, 3, 4, 5. Yeah, keeping it simple. Arguably, this over here in my book wasn't yet a long. It's more interesting the moment we saw the bullish CVDs. A little bit of proof of support. And that is then a potential entry. And then, of course, look for up. And in this case, if we're bullish, we want to at least see the high taken here before taking out this low. If we take out 67K, the probabilities will increase to take the lows. The other alternative for the bulls would then be a diagonal, but that's irrelevant till wave 4 is in, really. So, yeah, preferably you take the high before taking this low at least. And there is, of course, the potential for 1, 2, 3, 4, 5, and then correction. So there's still opportunity and potential. What's up, Suhail? Ooh, I'm not that fast, I see. Cheese, good job. Yes, thanks a lot. Pleasure. My question, in case of a bullish scenario breaking at the moment, would we still have a bullish scenario even when we are bullish? But how far would be max down? Wait. My question, in case of a bullish scenario up breaking, would we still have a bullish scenario even when we are bullish? There must be a typo in there, no? Must be a bearish. How far would be max down? 49.3K. Sorry, that's for your first bullish scenario, and the other one is 43.9K. 1 second. Log. Yeah, so this is 49.3K. Invalidates that bullish scenario, and the second invalidation is 37.7K. So in other words, the probabilities on the weekly are higher for the bulls. If you move into the 40s, that's when probabilities start to not move in bearish direction, but more towards the neutral. At the moment on the weekly high time frame, the probabilities are much higher for bullish continuation. Yeah. So you would need to lose. You would need to go to at least the mid 40s, low 40s before bearish starts to have a chance, really. Papa Live, how you doing, man? What's up, Papa? Good to have you here once again. Hey, Papa, how you doing in the gym? Oh, you pumping the weights? Mirovsky, merch website. Ooh, never thought about that. I did, by the way. Oh, sorry for the lightning. 1 second. So, look. Here's the thing, because of course, because of the new screen, I actually didn't yet install the light, so the like a screen light. So I can quickly do that. Gives a bit more light. Not fucking it up. Nice. And there was light. Okay, yeah, merge website. So I don't have a merge website. I mean, so Jeroen in Discord, he's a student and he needed a project and he needed to build a website for his studies. And he approached me and he said, yo, instead of making a website about whatever random topic, he was like, can I make one for you? And I was like, well, eventually I need one and it's for your studies. So, yeah, why not? And I need to deliver the texts to him. He's going on holiday now, so I need to do some writing and send it to him, and then he will do his magic, and then we'll have meetings regularly. So, but it's not a merge website. That's a normal website. I did mail the head store today, like the cap that I got the cap from. So this one. So it's embroidered, very nice. So I did email them if there's a possibility to have a collaboration, because I wear caps a lot. And I know people have been asking me about caps. So yeah, that would be a starter. But yet to be future, future stuff. Thinking about it at least, because I do get an increased amount of questions about it. Let's start with a website first, like a normal one, I suppose. Matthias, how are you doing? Cheers, Factor Call. Which wave currently Bitcoin on the weekly and the daily charts? On the weekly chart, we are looking at a wave 4, for then a wave 5 to the upside, which is a safe approach. Of course, your most bullish approach is that you have a couple of 1-2s, but the safe approach is we're in a 4, which also has currently the highest probability, and you expect at least one more 5. Where can I find all the FIB targets that you use? Most of them can be found in the description. Link, go to Elliott Wave Education in the description. So you scroll down pretty much all the way down. Elliott Wave Education title. There's 3 links. Click on the second one, I think it is. Open this website and read this and learn this. And I have some FIBs that I only changed slightly because of experience and other sources where I learned some things. Yeah. I don't have a copy trading account. And the reason is trading psychology. I'm more comfortable trading my own stuff instead of clicking buttons for others. It's just adds another layer of psychology to trading. You consider the crowd, just a thought. Yeah, that's true, Factor Call. That's true. Especially with the alts, of course, we tend to be on a bit higher time frame. But even like on the alts at the moment, it still takes time to do a good Elliott Wave count. Now, of course, the more alts we have done, the easier it becomes in the future, because the moment RNDR comes up again, it's like, oh, well, this is it. I already got the analysis. But the moment we go to a new chart, it will always take some time because I got to do the measurements and check the waves. But yeah, with the altcoin streams, it's of course best to go through it quick. Yeah, I agree. Oh, nice. Battery full of the phone. I see, Daniel. I was wondering if it's possible to use Elliott Wave to SPX and that stuff. Yes, because there's a lot of overlapping and I don't really able to count like I do on Bitcoin. The rules are the same. No, they're the same. Yeah, the rules are the same. So you can use it on ES and SPX and any chart. It's just that the higher time frames there are easier because on the low, there's so much overlap. So with these charts, there's so much 1-2s and then a big 3, and then you have so many 4-5s. It makes it difficult to count. But the rules are the same. Higher time frames are easier on those charts though. The weekly scenario is another wave 5 to finish wave 3 and another 4-5, and that's it. I don't think we'll go above 100k. The top should be 95, 98, and the next bear market will take the low from 15k. Oh, wow, yeah. 15k, that would be something, hey, imagine. That would be crazy. A little bit of bearish CVDs here. This has played out now, so lower high on price, higher high on the CVD. Took this low, so that has played out. A bit of bearish CVD. So the bullish CVD already played out. Bearish CVD now also played out. Of course, in an impulse, preferably, you look for continuation. No? Take the high before the low. That's what you're going to be looking for. If you take this low, the probability switch. Which is why I have an invalidation. Yo, Pedro, how are you doing? I already did gold. Wait, you missed it? Nope. There you go. For all the gold traders here, I made this video. "25 minutes, yearly, monthly, weekly, and daily charts, including probabilities at the end. And also what you have to look out for and how probabilities change." So our members, thank you, channel members. Thank you, everyone. Cheers. Yeah, so that is the gold video. Waiting in anticipation. Yeah, it's hopefully gonna help many people. So I have to make one more video. I probably do that tomorrow, and when that video is finished, I may have to change the ending of the first 5 or 6 videos, because I say, if you have any questions, please ask me in the group. But after 6 videos, I was like, well, I guess it's better to not say group as in Discord. I think it's better if you have any questions, please feel free to ask wherever. So after video 6, I changed the ending. But I may need to record me standing here and just say once, and if you have any papa, please make sure to ask. And then just paste the same ending to all of these videos, even though because it's only the last 5 seconds and then the video is finished. So who cares about how I end the video? You know, it's not the content. So but then instead of please ask questions in the group, some people don't want to be in the group. They want to write their question in the YouTube comments, which is fine as well. So I think I'll have to change that. And it's a quick edit. I just record 5 seconds, change the ending of the first 5 videos, and then just poop online. So I hope to finish it this weekend. 68k has been hit on other chain, but not your Coinbase. I see. Yeah, I want to see it here as well, at least. Yeah. We are on corrective wave on wave 4. Boom trading. What depends on the time frame you're talking about. I'm not sure what time frame you look for your wave for. There was a confluence 67,600. Price passed it, tested it, next target 68,400. Pass this one, next target 71. And there you go. Yeah, so I don't know, of course, what support or resistance areas you had. But yes, arguably, for me, the invalidation above is important, 68. And we had some bullish CVDs at the low, and the probabilities communicated earlier are up unless you had 66.2. And especially 65.5 would be bearish. So, yeah. Potential. Should I long now or need to wait for a better chance? Pretty much depends on your plan or your strategy. Which is, of course, the annoying answer, but it's the only one I can give because I'm not a financial advisor. Now, what I can give you is a rod that will help you to fish by using the following 6 steps. So, step 1. So in other words, what I'm going to try to do is help you to develop a plan so that you can eventually trade yourself knowing what to do because you have a plan. So you know exactly when to long and when to short, which is better than asking around to people that have their plan, but they know how to trade their plan. You don't know how to trade their plan, if you know what I mean. So someone can go into a long, but where's the target? Where's the stop loss? Why? You know. So what I recommend is following 6 steps. Step 1 is try as many free tools as you can on TradingView, get experience. Step 2, find your favorite tools and build statistics. This is where most people quit because they don't like that, but hey, it really helps. Step 3 is some of those favorite tools that showed good statistics, put them together. Now you're creating a strategy. So combine some of your favorite tools, build more statistics. Step 4 is tweak and adjust. Add a tool, remove a tool, build more statistics. See if you can improve your strategy. Step 5 is start trading your strategy with a low amount of money and work on your trading psychology. And step 6 is increase your portfolio size slowly to get used to bigger losses. Follow these 6 steps and you have a great probability of being a long-term profitable trader. Like years and years and years. But in order to become that long-term profitable trader, you probably have to give up on continuously trading for at least 3 months, half a year to build a plan. But it will pay you off. It will pay off long-term. What's up, Barbie? Yes, you can use FIB time. But it's a wave 4 generally ends between the 1 and maximum 5. So on a high time frame, it's quite a range. So I prefer to look on the daily time frame and the 4-hour time frame. What's up? Oh, you're a professional web dev with 20 years of experience. I'm pretty sure Jeroen would love to have a chat with someone as experienced as you. I'm not really sure what backend he uses. I think at the moment he's using WordPress or something more simplistic. I would need to ask. Thanks, Thought Drifter, for your proactivity and willingness to help out. I will let Jeroen know as well. Let me do this. Let me go to my private chat. Jeroen. Okay, there you go. Cheers, Thought Drifter. Thanks. And also props for last night, by the way. I really liked how you coped with the situation. So, good attitude there. Yeah, for now, 15K is not yet relevant. How to correctly use fib levels. You use a fib from always the left to the right. If you look for support, you have a low here and you have a high here, and you look for a retracement, you pull a Fibonacci from your low to your high. And then of course there's different fib levels, the 382 to the 886, or the 0.236 to the 886 are relevant from an Elliott Wave point of view. So it depends on how you want to use fibs in combination with Elliott Waves or not, of course. But these are now your support areas, and for resistance you pull a fib from a high to a low, or on the chart, if you have a high and a low and you look for resistance, you pull a fib from the high to the low, toggle all the fibs, and then each fib can act as resistance depending on what you're looking for and in confluence with some other stuff. The most common resistance is the 05786 area. That's your most common area of support or resistance. After that, it's the 382, right? And the 236886 are generally a bit less common. I think the 236 is more common than the 886 because of wave force that have the 236 as a common target. But yeah. AGGR. I mean, AGGR is a website, so I can't say too much about. So this is, of course, using CVD, and I got in touch with AGGR, like the website. We still have some various CVDs here again, by the way. Lower, high, higher, high here. But yeah, it's just a website where you see the chart. There's a lot of things that you can do in AGGR, and how you got this kind of view. Yeah, so on AGGR I only use CVD, but there's a lot more stuff you can use, and there's even community stuff as well, where there's so much you can put on your chart on AGGR, and it's very helpful. It's a really good platform. I just only use the chart and CVD lines, and that's it pretty much. And these are, you can customize your CVDs as well. Now, if you're interested in CVD, I do recommend to watch the CVD video, which is on the home screen if you scroll down here, right? CVD divergences, beginner's guide. And then in Discord, good to know channel. And then we have the one pager about CVD and how to trade it and what it is besides the video, right? So the video is priority, and then you have the one pager, website, ETH Sol template made by Dario, and the template that I use here. So yeah. CVD divergences. Yeah, so locally on a 5 min we had some bullish CVD, higher low, and then on the 5 minute lower low here on blue, you can see this low a little bit lower, so higher low, lower low. Price moving up, a little bit of bear, lower high, higher high here. But preferably see some more structure. It's quite simple. Elliott Wave probabilities here. If you move down, take out the low before the high, probabilities are higher. This is a 3-wave move up, increases probabilities to continue ranging or take the low. So if you take the high first, then the probabilities increase for a potential 5-wave structure or 1 2 1 2 and up. So yeah. That's pretty much what I look for at the moment is hitting 68k, taking this high before the low would be more bullish, or take the low before the high, that would be more bearish, pretty much. Cheers, Pierre. Hopefully you enjoyed the video, the gold one. If we top at 97k, maybe this is a wave B, and from 69 to It's possible if the next year will go into recession. If we top at 97, maybe this is a wave B. So you're talking about a flat from 69 to 15 to 97, and then have a C down to 10, 11. Yeah, you're talking about an expanding flat. It would be the craziest expanding flat in the history of Bitcoin. It's a bit early to talk about it, of course, but it's a fun scenario, yeah. The wave B target is around at 100K, yeah. Is there a possibility of Bitcoin going to 53, 52 before making new all-time high? Yes, FX Saint trading block. But the probabilities for this will only increase if you touch 65.5K first as a bare minimum. The minimum is 66.2. That is when probabilities might slowly switch to the bears, but 65.5 and the probabilities are higher for the bearish scenarios, which includes the potential of going to the low 50s. As long as you don't hit 65.5, there's not really a reason to move or really look for prices that low. Yeah. Not for Bitcoin, but like SPX. I don't know. I only know the crypto stuff, really. I don't know if there's even a CVD for SPX. You can check Trading Light, Coinalyze, and that's it. I don't even know if EXO or Atos. Maybe you can check CVD on Atos, for example, for traditional markets. But Atos is free for crypto, but you have to pay for other markets. So yeah, those are the only ones I know. So Trading Light, Coinalyte, Atos, EXO, and maybe one of these have that opportunity for SPX. Yeah. Cheers, Nero. What are the chances of seeing 70K from here, a new all-time high? Currently, the probabilities, as long as you at least make a new high locally before making a new low, would be higher to continue this range between 72K and 66K, meaning chances of seeing 70K or all-time high from here. Yes, but if you hit 66.2K, the probabilities will decrease, and if you hit 65.5, the probabilities for bearish scenarios increase. So we're now at the lower end of the range, and more locally here, we want to see the high taken before taking this low, 67. If you hit 67K first, then this becomes a 3-waver, increases the probabilities to take the low, or by bare minimum continue ranging sideways. JV Dade, Narrow. Yo, Nero, JV Dade, thanks guys. Yo, Mark, what's up? The problem is, and I unfortunately I can't give it back, can I? No. The problem is that I do not take like requests for of course, like, you know, $10 or because if I start doing this, yes, like people are gonna be like, oh, 10 there, but it's not worth the. I can't do it. You know what I mean? These streams are dedicated to Bitcoin, and the altcoin streams are on Sunday. So yeah. I can only accept personal requests by email, but then we're not talking $10. I've only done that once, which was for gold. I've never done that before, doing personal requests. I only did it for like I only did gold once because someone owns gold shops in another country and he wanted to know more about the state of gold. No financial advice, but that's why I did gold. So yeah. Just ignore me. He's spamming all the live streams. Ah, well, he's spamming with $10. I mean, YouTube takes 30%, so $7. Oh boy. But Nero, thanks for your thanks for the donor as well. Appreciate it. It's interesting. I can't heart this one. So cheers, guys. We were Mubashir Hayat. Oh dear, how are you? I'm new on your channel, just subscribed and joined Telegram. It's 2 months I'm in trading. Welcome to the industry, welcome to crypto, welcome to trading. Make sure that at the beginning, Mubashir, you do not put all your money in your trading account. Please, because you have a high probability of losing it, and many here will unfortunately be able to tell you how the beginning of their career was. So what I recommend to you as someone that's new in the industry, it's not financial advice, of course, but it is a very strong recommendation, is to only have a little bit of money on in your trading account, whatever is low for you, and just build experience. Survive your first couple of months in the market. Followed by these steps. Step 1 is build some experience in TradingView and the tools that TradingView offer, right? TradingView is free, right? So just use the tools and stuff and some indicators, get some experience, get to know the markets, and also get to know yourself, because your psychology will be impacted by the charts. Step 2, find your favorite tools and build statistics. Usually that if you're very new, that only happens after like a month or 2 months or 3 months. And then you build statistics, then you combine some of these statistics, right? You combine some of your favorite tools to build a plan, strat. Then you're going to tweak it, adjust it, and eventually trade it. So start slow. You have enough time. The market ain't going anywhere. As a trader, it shouldn't matter if price is at 10K or 100K. If you're trading, if you're investing, it's different. But as a trader, you care about percentage. Percentage up or percentage down. And on a daily basis, there's an opportunity depending on your plan. Also, my arguably biggest mistake and biggest tip is from the beginning, work on your trading psychology. Get yourself a couple of books from the get-go. And the recommendation, the 2 must-haves in my opinion, are the Market Wizard series. This is just one, but I have the others behind me. So Market Wizards, right? There's 3 books in the Market Wizards series that I recommend for you. And second, get this one, Mental Game of Trading, Jared Tendler. Links are in the description as well. And if you want, it's a pretty good one as well. It's Best Loser Wins by Tom Hougaard, right? Also in the description. I think. I'm actually not even sure if I put his in the description. I think so. So get familiar with the industry, play it safe. Don't try to be a millionaire in a day, because it's not gonna happen. You're probably gonna lose more money in your first couple of months than you're gonna win. So yeah. Yes, but the wave 2 is a bit tricky. So, but yeah, you can. Yeah, I have been trading since January 20. 2021. 1 second, I need to check. Yes. Because I remember, because I was asked to host a television show about crypto, and that is how I got into the market. So yes, January 2021. That is when I got involved with the industry. That is true, Kaval. But in this case, there's the possibility for this low to be a corrective low. And therefore the 886 becomes a bit less relevant, but it does mean that this low being a wave 1 with the current low being a wave 2 has low probabilities. What is the smallest time frame you recommend using fib time? Generally 15. I mean, you can use 5 as well, but I generally stick around on 15 or higher. I answered this one earlier. What is 1 and 1.236 Fibonacci? Oh, this is a trend-based fib extension. So trend-based Fibonacci extension when you look for targets outside the range that you measure. So these fibs are taken from the low to the high to the low. And you're looking for targets outside of this range. It's an extension. So, and you use these again to measure waves with one another, wave 1 and wave 3, wave 1 and 5, wave W with Y, wave W with, wave W with Y, wave A with C, wave W with Z, expanding triangle, CDE, 1.618. So you look for targets outside the range. Do time fibs agree with gun? Because on gun square of 9, another big move should happen around the other. Ooh, Tangerine, I'm not too familiar with gun. So I'm not really in a position. So I know a little bit of gun, but I don't have enough experience to compare fib time with gun. I only have experience with fib time, so I won't really be able to answer the question. But I can imagine there must be some confluence between the two, no? Semolidi, how are you doing? Welcome. Pleasure, Felix Chiga. And yeah, especially in the first couple, like if you're new in the industry or in your first couple of months, just keep the budget low. Just keep it low. Don't get baited. Don't look at the moon boys that draw you into putting all your money in your trading account and then trade recklessly with high amounts of leverage. Stay away from the leverage. Just use 1 to 3x, max 5x. Put a low amount of money in your account and first build experience with the market. Build experience with the chart, with the settings, indicators, tools. Eventually build a bit of a plan, like be part of a community. So welcome to the community as well. Ask questions. People are always able to help or have sources for you to check and discover. And grow your way into eventually building a planned strat and a bigger account. In the beginning, the probabilities are very low. You have a chance of winning. And if you do win at the beginning, it usually starts to create, oh, this is easy. Oh, wow, why do people struggle so much? And then greed takes over, and before you know it, you lose everything. There's this typical, there's a well-known quote, I don't know which book it is, where they say, if your first trade is a win, you have a problem. So it's that's a nice one. Cheers, pleasure, Mubashir. Pleasure. I've been successful enough to keep steady trades with 65x. If you have a good plan and you have a good strategy, it's no problem. But for most of the beginners, it is not a good idea. But if you have a plan or a strat, then it's no problem. If you know what you're trading, you know what you're looking for, you know stop loss, take profits, and you have a plan, preferably some stats. 65x, you can even have a trading plan using 100x leverage. And also, using leverage doesn't mean increasing your risk. The problem is that beginners generally do increase the risk. So you can trade 65x or 100x, but you can still only risk 1% or 5% of your portfolio. The problem is that usually as a beginner, you don't really think about losing 1% or 5% of your portfolio and stuff, because you don't yet have that experience. You're not thinking about, oh, I'm calculating my position size. I'm calculating my stop loss, I might take profit, and this is my plan. They just want to be in the market, try to make as much money as possible, and then every take becomes an emotional roller coaster, you know. So 65 is perfectly fine if you have a plan. But at the beginning, the recommendation is keep things very low, because you increase the probabilities for yourself to not get wrecked, basically, and to get more time in the industry. Ionut, good to have you here. Welcome again. I'm at the beginning of my Elliott Wave adventure. Following your advice, very useful. I was following other channels, but abandoned them after seeing your stuff. Thanks, Ionut. Of course, I mean, there might be others out there, of course, with great content as well. I'm not competing with anyone. I'm just sharing what I love to share, and hopefully people find it useful like yourself. But yeah, thanks. I appreciate it, man. That's very kind. That's very kind. I'm gonna take a little... So yeah, at the moment, right, bit of a range. Bearish CVDs might play out if we take this low here, and I think it's time for me to chill with the wife. It's 11 p.m. so spend some time with her. So with regards to the probabilities, I just want to keep it local for now. If price moves down, takes out this low before the high, probabilities increase for a three-wave structure, of course, and therefore it increases probabilities to take the low or at least continue ranging. But lows do increase. The only bullish scenario in that case would be a wave 1, 2, 3, 4, and a 5 for a leading diagonal, but it's very early to talk about diagonals. So it would increase probabilities for the bears until proven otherwise by a diagonal in that case. If you take the high before this low, the probabilities increase for more bullish scenarios. On a 4-hour time frame, hitting 66.2k increases the probabilities for a bit higher time frame bearish scenarios, but only slightly, because the most important level is 65.5. If you hit 65.5, then the probabilities for your bigger bearish scenarios will increase, meaning a bigger wave Y or a bigger wave C, right, on the daily time frame. So we're going to continue to see what price locally is going to give us. As long as price does not hit 66.2k as a bare minimum, it's difficult to give probabilities to the bearish scenarios, because the only bearish scenario that really works at the moment would be a diagonal, because this structure has a higher probability of being a three-wave structure compared to an impulse. But in the diagonal, we didn't even finish wave 3. We didn't even finish or even move below the low of 1. And you can, how can you give the highest probabilities to a structure that doesn't even have a wave 3 finish yet? So that is why the local importance is moving above the local high here to 68k before taking 67. If you take 67 before 68, probabilities do increase a bit more for the low here. And if that happens, then the bigger bearish scenarios increase. But yeah, on the 4-hour time frame, probabilities would be higher to continue this range over here and look for price to move up, unless you hit 66.2. Very easy. Then probabilities start to switch and hit 65.5. Probabilities higher for the bears. And that's it. So very simplistic, I suppose. And I don't do copy trading. I help people to fish, but I don't fish for others, I'm happy to share my fish, which I do on YouTube and Discord. But it just adds another psychological layer to trading. Psychology is my biggest weakness in the past, or was my biggest weakness. Nowadays it's good, but it was my biggest weakness. So I just want to trade for myself. I'm happiest when I do that. Yeah. If I don't want to click buttons for others. But yeah, everyone, thanks for being here. Thanks for hanging out on your Friday night, evening, afternoon. I appreciate you spending some time with me on the live stream. And I hope you have or are gonna have a great weekend. Tomorrow will be another live stream. Tomorrow night, no update video because I will have dinner with my family, my parents, my brothers, everyone will be there. So there will be an update tomorrow morning, normal video. There will be a live stream. And yeah, let's see what the weekend is gonna give us, right? So congrats, by the way, Gregors Musial on your trade. Very good. So thanks everyone. And I'm going to catch you at the next one.